Hey guys, hope you guys had a good day trading today. I know we had a little bit of a rough start to the week, but I'm glad we were able to finish on two really nice days here, and we had a pretty nice day here today too. So let's take a look at kind of where we're at here. So I mentioned on sometime earlier this week that were we going to see 405 or were we going to see 420 first? Well, we have officially answered that question, and the answer was we were going to see 405 first. So now from here, the question remains, are we bullish or are we bearish? So I don't think it's as simple as just a question of bullish or bearish. For me, I mostly see consolidation. And this diamond pattern right here also kind of hints at that we are just stuck in this bigger consolidation period. And I kind of started talking about this right around this time here, that we're really just pretty much in this like 406 area to 417, 416.8 area consolidation. Gives us about a $10 to $11 consolidation area, which if you look back here, when we spent time down here, we consolidated from 376 to 386, about $10. And the same thing here, when we consolidated right here around 392 to right about, look at that, 402. So we find ourselves in these bigger $10 consolidation periods. And honestly, even right here from 388 to about 399, 398 right there was $10 of consolidation before we finally moved up. So I just find that these $10 pockets that we find ourselves in are high probability, and generally they lead to a bigger move up or down. So if you look here, we had this $10 range here that led to a bigger breakdown because of CPI. And then we had this $10 range right here that led to a bigger breakout. Then we consolidated $10 more, and then we broke out. So now we're finding ourselves that we're stuck in this $10 range. So I was bearish going into today. I expected this breakdown. I expected a test of 405.3. And on a daily time frame, holding, and you can scroll out here and you can see the significance of this pivot point right here, holding this 405.3 area here for me, honestly, it makes me bullish, but limited bullish. Now, I don't think we're going to be pushing to like 430s or 4,300 area, but I do see upside here. So what I'm going to be looking for tomorrow, or Tuesday, remember we got a 3-day weekend here, is a push back up in this area. So we have this double level right here, I call them, where we have these just, basically it's a pocket of about $1 range, and this one's 411.2 and 410.3, we'll call it. Whenever we have these double levels, I call them, you can see we had it right here too. Basically what we do is we find ourselves pivoting over that, and this is also a really great sign of consolidation. So the further we get from basically 410 to 411, the more we should expect it to retrace there. So now that we have pretty much hit the extreme of $5 from that move, we should expect to move back to that area. Now, also looking at the daily pattern here, we have a really nice abandoned baby pattern. Basically, for those that you don't know, the abandoned baby pattern, and I have it highlighted right here because we actually repeated it one other time right here on January 19th, where we have these massive breakdowns, and then we have a doji candle finish, and this one is even more of a reversal doji candle back up. And then the next day is a very bullish price action back up. Usually retraces at least 50% of the overall drop, which puts us right back at that about 410.2 area, about a $5 upside from potentially on Tuesday. So that's basically the biggest thing I'm seeing here in the daily. We did lose 20 EMA. However, we retook it before end of day and did close over the 20 EMA. So the next big move up is going to be to test this daily 8 EMA. If we cannot get back over this daily 8 EMA, we might come right back down to 405.3. But for now, as long as we can push back up, I'm going to be looking for at least minimally a break back over 408.1. And really key level of the watch is 408.14, as we do have a gap to fill here, which is what brings on that abandoned baby pattern. Now, taking a look at the weekly pattern here, we actually have more of a wider time frame rising wedge formed here, which basically means that if we break out of this support down here, we're going to see a bigger sell-off. However, as we have seen before with some of these rising wedges, if we get enough momentum, you can break through the upside and turn it into a bull channel, kind of like you see here in this black one. So biggest things to note here on the weekly time frame. So we came down here, we consolidated, we pushed up, we consolidated, we pushed up. we honestly are looking like a textbook bull flag here. So we haven't lost this 402.6 support. So we really are still in a bull flag here. Now we have on the weekly time frame a key 407.2 support, and you can see we had the high here on November 28th we established. Basically what we did is we established this resistance here, and we established it back here in September. We attempted to break through it, we lost it. We attempted to break through it, lost it, attempted to break through it, lost it. And then here we broke through it, and now we came back down. And to me, this very well could be a 407 support bounce. So this could be bullish. As long as we maintain that 407.2 support, 407 support, then we very well could start looking for a push up. Weekly support to keep an eye on is going to be 408.2. Break through that support, and then we're going to lose this overall bull channel right here. But again, if we're in consolidation, then we are probably going to lose the bull channel, but we could still be, does not necessarily mean we're going to see the bigger sell-off. A big thing to see here too is that this is now our third week in a row with a full candle closed over the weekly 8 EMA. The weekly 8 EMA has taken the 50 EMA, and our 20 is coming up on the 100 EMA here too. So overall, what I'm looking for here is a retest of 412.2. If we can close really over 412.5, now that I'm a little more zoomed in here, 412.5, if we can take that out and close over that, then we start talking about 417.1 and maybe with a really extreme move, 422.3. However, if the bulls do lose 407.2 support and especially close under it next week, then we really start talking about support down here at 402.6 and then even a bigger retest of 398.7 and possibly even 395.7. So taking a look here at futures, very, very similar idea here. You can see we have this broad and really, really wide bull channel, and then we have the red bear channel. So again, still possible that this is a overall bull flag. So we did something that I want to point out here is that I've mentioned this 40.85, which is right here, to 40.95 is a major double level. So we come down here, and this is now the 4th time, really 5th if you can include those massive wick on FOMOC, that we have come down, attempted to break through 40.85 and have failed to do so. So now this is an awesome morning doji star reversal pattern with this massive wick down here and this massive candle. We absolutely should be expecting to see about 41.20 next week. I would be very surprised if we didn't see that, even on Tuesday. Just because the way this pattern works is you have these massive breakdowns, you have an attempt to continue, but then you get a massive rejection up with a candle body like this, and that signals an upside. So this shows me that we're going to come back up and test this daily 8 EMA up in the 41.20 area. Now, same thing, we have a beautiful diamond pattern here, which signifies that we are in that chop. And for us, really here, our big levels to keep an eye on is right here at, let me see. Sorry, right here at 41.23 and 41.45. And those levels I have mentioned numerous times in the past, that 41.23 and 41.45 are key levels. So I do expect to see a fight Tuesday at 41.23 and attempt to get back up there. Now, in the off chance that bulls cannot get back through 40.95 for some reason, then we really could be thinking about a bigger push down to 40.40 area. But the fact that this is now twice in a row, we've had these really high probability setups of really bearish days with news and support and volume and all that stuff and have not touched 40.40 tells me that this 40.55 area here is a major support, which if you look at the CPI high right here, it really is a really nice support area that we could watch for a potential bounce area like we saw today. So overall, I will be looking for upside on Tuesday. Taking a look at futures weekly here, same thing. We've got this really nice rising blue wedge here. Same thing though, we kind of have a really nice bull flag though. So something to look at here on futures weekly is that we actually did come down and touch the 8 EMA, and that is looking pretty solid for upside there. Now, our upside and key level for weekly support is 40.95. So bulls are going to want to open over that on Tuesday, really Sunday night for futures, because market is closed Monday, but futures is open Sunday night till Monday morning, and then we'll reopen Monday night into Tuesday morning. So far, though, we're looking pretty good here. Bull channel is still intact. Biggest thing to see here is while I do have 40.95 as a major level, another major support down here is this 40.75. You can see we double topped here on the 28th of November and December 5th, and then we broke through it here on January 23rd, but retested it and confirmed it as support on January 30th. So the fact that we came down and wicked through it but held and closed over it, this again could be seen as a bullish potential bounce area here. So upside potential, we're going to definitely be eyeing that 41.50 area. And then downside, if we lose 40.75, we're looking at about 40.20 as a bigger support area. Taking a look at Tesla here. So Tesla looked pretty weak. Yesterday we had that massive news drop on not only Tesla but SPY. And we came down here, we held the ADMA, and then today we actually had opened under it. And there was a convincing amount of time in the morning at least that we were going to see a bigger sell-off today. However, bulls actually found their support, and despite breaking through this blue bull channel right here, they actually closed back over the daily AEMA in a very bullish way. So this failed breakdown, and you can see with this, I mean, this happened right here also, where we had this breakdown, and then it our attempted breakdown, but then we bounced. So we really should be looking for upside. The biggest level that bulls need to take out and have really struggled at now 1, 2, 3 different times is 215. So it's really about 214.3, but 215 is the actual daily 200 EMA. So going into next week, that is going to be a major level to keep an eye on. If in the off chance bulls cannot break through 215 again, then we're going to start coming back down here at this 199.6 support and potentially even a bigger sell-off down to the 191.7 area. Taking a look at the weekly here. So now I had mentioned last week that I was bearish on Tesla for this week. And based off this doji right here, it should have brought a little bit of downside. Now we did get some downside, and we did touch the weekly 20 EMA, and we didn't quite get to the 200 at 183.7, but we did come down to the 20 EMA here, and we actually were able to bounce in a more bullish way. So the fact that we were able to close higher is actually bullish and does show some continuation. So that's where it shows you that not necessarily every pattern is going to play out. I think I mentioned last week on Tesla that I was more bullish when we had this bounce here that we could come down, but we had this doji, and that made me more bullish for the week on the daily time frame, but the weekly was showing a little bit different of a pattern. So that's where we got to play both sides, play both patterns, and just overall keep everything in mind. But also we have to keep in mind that Tesla is a meme stock. It's really not a meme stock, but it just behaves like the other meme stocks. So we just got to be careful with Tesla in general. But biggest thing I'm seeing here on the weekly time frame is this 208.4, and you can see this dates back to the November 7th top right here. We did not get through this, and this is the second week in a row now that we have rejected or not broken through it, closed over it, I mean. So next week, that's going to be the level we want to break through, and then from there, the next major level to take an eye at is 226.4. Taking a look at the VIX here. So yesterday I had mentioned, and I did play it, that if we come down here and pretty much anytime we close below 19.3, there is a bigger, or this was 2 days ago now, sorry, there's a bigger recoil back up. And we had this massive day on the VIX, huge 10.65% day yesterday. And we had a nice red day on SPY. We put in that negative 1.4% day. So now looking here, most of the day the candle pattern was up here, and if you look at this candle right here on January 3rd, that's actually what the candle structure looked like for most of the days, or the day I mean, and then we had a pretty good end of day sell-off right there, and that really brought the VIX down. So now this is actually a reversal pattern back down, failure to continue, and we closed below the close yesterday. So 20.16 is where we closed yesterday. Today we closed at 20.0 0.01. So this is a reversal candle. Now this is not a doji, and I would like to have seen a doji much like this one for a very high probability, or even like here for a very high probability retrace. However, I still like this for a retrace. And I still like this for downside that we're going to probably see 19.7 really to 18.9 on Tuesday on the VIX. We'll see some downside movement there, which should, and now remember, every time I've told you that when there's a high probability daily set up on SPY and futures for upside reversal, and VIX has the opposing reversal pattern, that it's an extremely high probability play, and I will take that play every single time. And if it's wrong, it's wrong, but it's just a really good play to take. So I am playing the calls for the weekend. I do expect some upside, and we'll just kind of see what we bring. The last little piece of the puzzle here is Bitcoin. Bitcoin remains extremely bullish, and yesterday, or 2 days ago, this is today's candle, so on Wednesday, we had that massive push. Yesterday, we did get that huge rejection, and I did get worried about some bigger downside here on Bitcoin. But Bitcoin has found its daily 8 EMA support and is actually pushing higher and closed its highest candle. So this is the highest candle close. We closed at, let's see, 24.58. Let's see, this is, oh man, we got to go all the way back to, so this is the highest close since June 12th. So that's pretty impressive. And right now, assuming that this candle can find some more support up, we actually are in a convincing run that we're going to break into the 25 to 26,000 range this weekend. Bitcoin has had some pretty impressive runs the last couple of days here, so I'll definitely be keeping an eye on Bitcoin this weekend. And with the 3-day weekend, it'll be interesting to see how markets react. I feel like historically, when we look at our 3-day weekends, if I get some time this weekend, maybe I'll research it. But historically speaking, on our 3-day weekends, we generally get a pretty good upside move, it seems like, on most weekends. So I'll definitely be looking for that this weekend and kind of see where we go from there. All right, I hope you guys had a good week trading this week, and I will see you guys next weekend on Tuesday for trading.